Let's get you a more fundamental view on the market. Joining us live on Street View at lunch is Piyush Garg, Chief Investment Officer at ICICI Securities. Afternoon, Piyush. Thanks for joining us. Firstly, your reaction to the shocking IIP data. The market seems to have completely ignored the number. It's almost indicative of the fact that it doesn't believe this data in the first place.
Yeah, hi, good afternoon. No, I think you have rightly summed it up. The data has been volatile. So 1 month data is, I think, not to be taken as something which is a confirmed trend. And this has happened earlier also. I think even last year you had, especially if you see capital goods and all, it has been fluctuating from minus 25% to plus 40% and all that. And we have seen this number, it was even negative, and I think in October then became positive 5% next month. So these things, I think, happen now with this number, and it is less and less reliable. So that is very clear. So that is one part. Second thing is, I think this IIP is past, and what market is right now, to my mind, and that is what it has shown actually in the last 2 days, especially the way the banking sector has performed. To my mind, I think the market is looking ahead to the policy now, and the way 10-year G-Sec yields have also dropped from 875 to 845 odd levels, I think is possibly also a sign that market is now trying to look forward to a repo rate cut and a CRR cut, or maybe both. So let's see, I think, what happens on Tuesday, and that, I think, will be a more decisive factor in case market needs to break this range of 5150 to 5400, which it has been, I think, trading for almost a month now.
Piyush, hi, afternoon. You've got the IT big boy Infosys coming up with its earnings tomorrow. What's the expectation? Do you think a positive surprise is something that Infy could deliver?
I think it's a very difficult call. You can flip a coin and also decide, I think. And the other thing I think that has happened over a period of time now, last many quarters, is that Infy has stopped being a very, giving direction to the market. Even if it is good, it's okay. Even if it is bad, it's okay. So market is moving more on other macro factors rather than possibly Infy, which used to be, at least 7-8 quarters back, one of the decisive factors in terms of market sentiment. I think that has ceased to exist now for last 3 or 4 quarters. So I expect Infy to possibly, I think guidance is more important. So possibly a guidance in double digits of 11-12% dollar guidance will be, I think, something which should pay well for this sector as a whole. And I think the other thing is that possibly this sector is also a good hedge in case the market was to go down, because if market is going down, there are chances that dollar would be appreciating and rupee would be depreciating, or both would be happening, which I think provides a good hedge as far as this sector is concerned. In case one is long on the market from a portfolio perspective, one can be a little long in the tech stocks, especially the large cap ones.
Piyush, how would you play the aviation pack? You know, this buzz of FDI and aviation just keeps coming and going. It wasn't taken up by the cabinet this week. Today, we're now given to understand that it could be taken up next week. How would you advise investors to look at the aviation pack?
No, I think that famous thing, buy on rumors, sell on news, I think. So whenever this news tends to get factored in quite a lot, I think last 2 days there have been a lot of buzz that FDI is coming and these stocks have been rallying. So I think it makes sense to sell those stocks into that rally. And in case things die down, you again possibly buy that some news or something will crop up. I think we have seen that even in FDI, in retail also. We have seen so many times it happening and then not happening. So I think these things are very difficult to, I think, predict as to when exactly it would happen. So my sense is that I think this sector, again, fundamentally there is nothing to be too gung-ho, I think, in this sector. I think from a shareholder perspective, I do not know what kind of returns one can expect over a longer period of time in this sector. It's not that if you open for FDI and suddenly you have a line of various foreign carriers coming to just put money into India. I don't think that is the case. Many of the large carriers, another private sector carrier like Jet, is not able to do so well despite having so strong market presence in India and now even in international operations. So it's a tough sector, and globally also it's a tough sector. It's not that it's only tough in India. It is, I think, tougher in India because of certain regulations and all. But I think not more than that. It's a trading sector, and whenever I think this news comes and the stocks rally, one should be very wary of buying at higher levels.
Piyush, in a range-bound market like nowadays, we've seen typical outperformance of traditional FMCG spaces, the likes of an ITC as well as Unilever. Do you think that this traction that we're seeing in some of these names would continue?
No, I think the analysis is very simple. There is no complication here. If you see January and February, I think these two were the months when both these sectors, I think the FMCG and pharma, they did very poorly. And vis-a-vis Nifty, they gave, I think, even negative returns. Nifty was up almost 20% at one point of time. And many of the stocks were down from 52-week highs, 4-5%. So, and now since last 1 month, it is looking more and more that 56 is a cap. Until the time that view sustains, or Nifty does not go above that level, it is possible that the money again shifts back from banking, infrastructure, real estate, all these stocks which rallied, and